Stocks. Whether you're a businessman trying to gain some assets or a kid trying to legally gamble, there's always something to gain and lose, and that's what's great about them. Hi, I'm Woody Smirk, and I'm a kid who wants to help other people get into stocks. So let's dive right in. Okay, so first things first, what are stocks? A stock is a small ownership in a company, which makes or loses you money. This is because the company is taking your money, investment, and using it kind of like a loan. You can then sell your stock in the company to gain money later or cut your losses. But Woody, what about crypto? What about crypto? You know Bitcoin, Ethereum, and Doge? What are those? Those are called cryptocurrencies. They operate similar to stocks, only they are extremely volatile and decentralized. All this means is that no entity owns the currency and everything is logged on the blockchain. Now that we know about some different securities, the technical term for assets you can buy, let's go into some lingo. Alright, so first things first. When the market is up, it's a bull market. When it's down, it's a bear market. To be bullish is to want the market to go up, and bearish to go down. There are also things called the bid and ask. Essentially what the bid is how much people are willing to buy an asset for, and the ask is how much people are willing to sell it for. Typically, people just buy the ask. Other good lingo to know is the type of squeezes, especially nowadays when one happens every other day. A gamma squeeze is when people drive a stock's price up by buying an excessive amount, and a short squeeze is when people do the same to a shorted stock and hold the stock, not allowing shorts to sell, which causes the shorts to lose their positions, leading to the stock going up even more. Essentially what happened to GameStop earlier in the year. There are also a buttload of contracts, like calls, puts, and shorts. These are advanced trading techniques. Calls are an option to buy a stock at a predetermined price by a predetermined date, allowing you to buy at a certain time and price strategically. A put is the opposite, as it's the option to sell a stock at a predetermined price by a predetermined date. Shorts are different though. They allow you to make money if the asset falls. Essentially what bears do. Hedge funds are the man. They are bears and bulls, but a lot of the time they heavily short stocks, which results in squeezes. Alright, now let's talk about the exchanges. You may have heard of the S&P 500, New York Stock Exchange, or NASDAQ before. Well, these are exchanges. You can invest directly in these exchanges, but mainly they are where you buy stocks, excluding crypto. It's not much you need to know about these, but a good rule of thumb is if you're making more profit in percentage than the S&P 500 has grown, then you're beating the market, which is really good. Time to go to the brokerage zone. So now we're here. You've learned all about stocks, learned some info about crypto, and know the general lingo. So how do we buy some? Well, that's where brokerages come in, where you buy stocks. There are many, but I'd stay away from Robinhood because it tends to crash a lot and has been having bad rep lately, and I'd recommend Webull. It's super easy to use, supports a variety of crypto, and allows you to get 2 free stocks by signing up. You can sign up by using my links below, and both of us will get 2 free stocks. For cryptocurrencies, you can use a stock brokerage if it's popular, but altcoins, you're also going to need a crypto exchange. Coinbase is pretty good and standard, but I've heard good things about Bittrex as well. Just keep in mind, if you're under 18, you need a parent to make you an account under their name because you get taxed on asset income, and if you're not an adult, then you can't have a brokerage account.
Alright, so you got your brokerage, maybe a crypto exchange, but you don't know what to do next. Well, here's some rules of thumb. Rule 1. Have the diamond hands mentality, aka don't sell too early because taxes are super high on short-term capital gains, essentially meaning half of your income is gone unless you hold your stocks over a year. Rule 2. Make sure you think before you invest. Unless you're going really long-term and want to invest in a dividend stock, you need to be aware of when stocks are going to do well or bad. Typically, if a stock is at its all-time peak, don't buy because it's too risky. But if it's dipped, then buy the dip. It's just like the saying goes, buy low, sell high.
Alright, that's it. Thanks so much for watching. I hope you all have a great day and have some fun times investing. If you all have any questions, don't hesitate to comment below. I know this content is different beat from my usual stuff, but I'm trying lots of different content to see what sticks. And if you, the viewers, want anything specific, just let me know. Alright, you hooligans. Peace.